conflict to something regional, not just constrained to between Israel and Hamas. So we're going to get more insight into what exactly is happening as Secretary of State Antony Blinken makes another trip to the region. Stay with us on Sound On for that. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The S&P 500 index is edging higher on what is shaping up to be the stock market's worst week since late October. We are on track for a losing week for the S&P 500 index. Looks like a loss this week of 1.5%, but right to the numbers with the S&P now higher by 12 points, up by about 0.3%. Look at that. We've got the S&P now at 4,700 even. We've got the Dow Jones Industrial Average up 50. That is a gain of 0.1%. 0.1%. NASDAQ, the composite index, up 37, up by about 0.3%. And we have got the NASDAQ 100 index up 0.3%. NASDAQ 100 also eking out a gain with the tech-heavy benchmark poised to snap a 5-day losing streak. The 10-year 4.03% with the 2-year 4.38%. Spot gold up $4 the ounce to $2,047, up by about 0.2%. West Texas Intermediate crude up 2.5%, $73.99 a barrel. So again, the S&P 500 index now at 4701, up by about 0.3%. Briefly, Constellation Brands higher after reporting better than expected beer results for the fiscal third quarter. Constellation's brands include Corona Beer and Robert Mondavi Wine. The stock right now of Constellation Brands up by about 3%. Again, recapping, stocks higher, S&P up 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound on Bloomberg Radio.
Welcome back to the fastest show in politics, where that includes geopolitics. That's the discussion we turn to next, because it has been a week of developments in the Middle East. They've led to growing concerns about the war between Israel and Hamas spilling over into something much more broader, regional conflict. Secretary of State Antony Blinken is currently on a trip to the region. It is the fourth one he has made since October 7th, as the U.S. is trying to keep the temperature down. That may be getting harder to do as you have Houthis still attacking vessels in the Red Sea, and of course the events in Iran of this week, a terrorist attack that ISIS took credit for. That's just the start, I'm afraid. So let's get more now with Nick Wadhams, who leads Bloomberg's U.S. national security coverage here in Washington. So Nick, have there been any other further developments concerning perhaps escalatory events in the last 24 hours?
Well, it's fortunately been relatively calm in terms of events like that, though we did hear from Maersk, obviously a big shipper that had been going through the Red Sea, saying they are suspending any shipments through the Red Sea for the foreseeable future. So basically saying they're not going to take the risk. And, that's a pretty big deal, because the U.S. has essentially put together this huge coalition to say, listen, we want to reassure everybody that it's okay to go through the Red Sea. But so far it looks like shippers are not really buying it. So the question is now, okay, what do they do to eliminate the threat posed by the Houthi rebels? Yeah, and we're going to get more on the impact all of this is having on shipping and transit in just a moment with Lee Klaskow of Bloomberg Intelligence. But when it comes to Secretary of State Antony Blinken specifically, as I said, he is traveling in the region. What is his primary aim here? Is the U.S. still hoping that diplomacy is going to be able to essentially solve these issues rather than potentially more military force than we're currently seeing? Right. Well, I think there are a couple of things he's doing. One is obviously he needs to talk to Israel, but there's so many divisions between the U.S. and Israel right now about what happens to the Gaza Strip after the war. You have divisions within Israel between really sort of hardline ministers saying they want to erect Israeli settlements there. And then other ministers, Yoav Gallant presented a plan yesterday that suggested there would be no Israeli presence. So they've got to figure that out. So he wants to patch that over. But he's also going there to say, listen, this cannot turn into a broader regional war. He's in Turkey right now. He's going to be going to the Gulf states. He's going to be going to Egypt, obviously, as well as Israel. So I think you're going to see two big messages there. One is let's start thinking about what Gaza looks like after the war is over. The second is there's a lot of instability in the region right now, and this cannot turn into something bigger. Well, and it strikes me that he's making all of these visits to actual states, and yet a lot of the actors we're talking about here are not state actors. They're perhaps backed by a state actor, Iran, but they're Iranian proxies. They're these groups. So I guess how much does this actual, visiting these different countries help when you're not dealing with those countries specifically? Right. I mean, it's a great question because, the real shadow player here is obviously Iran. And how do you exert influence or leverage over Iran when they can hide behind these groups and sort of say, hey, this wasn't us. They have full operational control on their own. But, obviously the Saudi Arabia stop is going to be huge. That's at the tail end of the trip because the U.S. is really going to need Saudi buy-in if it decides to go ahead with strikes on the Houthi rebels directly. So not just playing defense, but going on offense with with them. You're really going to need Saudi buy-in, in part because attacks like that could provoke attacks against Saudi Arabia in retaliation. So I think what you're seeing here is not so much some expectation that he's going to be able to use these countries as middlemen, though he is stopping in Qatar, and Qatar has played that role in the past, so likely there. But otherwise, it's really going to be about getting their support for what could be a more robust strategy toward the Houthis in the weeks ahead.
All right, Nick Wadhams, who covers national security for us here at Bloomberg. Nick's had quite a week, quite a few months, but we're very glad to have him here to keep us apprised of all the happenings. And in fact, he also kept us apprised of the latest from Maersk, and that's what I want to turn to now. Obviously, one of the world's biggest shipping container companies says it is going to continue diverting ships from the Red Sea for the foreseeable future. All of their vessels that had been due to transit that waterway are now sailing south around the Cape of Good Hope, so going the long way around Africa. Let's get more on this now. Lee Klaslow is joining me. He is the Senior Freight Transportation and Logistics Analyst at Bloomberg Intelligence and also hosts BI's Talking Transports podcast. So, Lee, just give us a read on where we are in terms of transit right now. Just how snarled have things become?
Yeah, I think we're definitely in early innings, and the length of the game, or how many innings are in a game, will really depend on what's going on in the Red Sea. What's going to happen is more and more ships divert away from the Suez Canal and go around Africa. It's going to add time to the voyages, so we can add anywhere between, call it 10 days to 14 days of transit times. And what that's going to do is it's going to impact the ports that they visit, because the ports kind of space out the reservations and the unloading schedules based on when they believe the ships are coming. And if all the ships are going to be delayed, then you're going to get a bunch of ships coming into these ports. You're just going to see, freight become delayed as ships are waiting, to unload or load. This is having an impact on rates. We're seeing rates increase, rates especially from Asia to Europe since the October lows. It's up around like 250%. So that's a big jump. But what I would say is that they are relatively depressed. So they're coming off some very depressing lows. So it's not like it's where we were in the pandemic, where rates were $15,000 for a TEU. Right now we're at $2,500 for a TEU.
So, Lee, I understand your point here is essentially that everything's relative. Rates may be higher, but that's because they are lower than they were previously. But I just wonder if that leaves more room for them to go even higher because we're coming from a lower base. Just how much more do you think freight rates could go up here?
It's a great question, and the answer is really going to lie in, per your previous conversation. How long are they going to let the Houthi rebels do what they're doing in the Red Sea? When I say they, I mean the global community. Once we start doing convoys like we've done in the past, commercial ships will be a lot safer because they'll be like ducks in a line, and in front of it will be a U.S. aircraft carrier, and so that'll obviously maybe not speed things up as they were once before, but it'll make the waterways a lot safer. I think this is something that's going to take months to resolve, not quarters or years. And so what would probably happen is once shipping patterns normalize, you're going to see rates go back to those October lows. But in the meantime, it's good for Maersk, it's good for Hapag-Lloyd, it's good for all the container liners out there, and it's also good for freight forwarders such as like DSV or Expeditors or UPS, which has a large freight forwarding business. So these things are good for the near term. I think it'll provide an incremental boost to earnings for the first quarter for a lot of these companies. I don't foresee it being that much of an impact where all of a sudden we're going to say Maersk is going to make money in 2024.
Okay, and of course, for Maersk, they don't just have to be mindful of what's happening in their Red Sea and their ability to transit through that waterway. There's other areas as well, and I know I've asked you this before, Lee, but I think it's worth continuing to remind people of because so much attention is being placed on the Red Sea that there is also a large issue in the Suez Canal, and a lot of global trade also has to go through that choke point, and there's drought. We're seeing serious difficulty in those waters too. How does that exacerbate this issue?
Yeah, and so for shipping's been impacted by a lot of things over the last 2 years since the
And I
pandemic.
mean the
And you
Panama
had the-
Canal.
Yeah, you had the war in
Red Sea on the
Ukraine,
brain.
which is Friday. You had, the war in Ukraine, which impacted more or less the tanker and dry bulk market. And then now you have, as you mentioned, the Panama Canal drought conditions, which is limiting the number of ships that can transit over the Panama Canal and also limit the amount of cargo that those ships can hold. Then you have, on top of that, the issue in the Suez Canal with the Red Sea. What is this doing? It's absorbing all this excess capacity in the market. I mentioned that, rates between Europe and or Asia and Europe are up 250%. Rates between the Trans-Pacific rates are up 100%. So it's been good for all. If we're looking at the container rates, but it's also, complicating supply chains. Obviously, the only thing that's going to make the Panama Canal a better option is if we get rain, and I don't think that could be a man-made thing. Where in the Red Sea and the Suez Canal, there could be intervention from, like I mentioned, governments to ensure that that area is safe. But it is having it is mitigating the extreme slack capacity that's in the container liner market. The container liner market supply of that is supposed to grow at a rate twice that the demand is, and so that has been very bad for rates, and that's kind of why we were where we were in the fourth quarter.
All right, Lee, we got to leave it there, but thank you so much. That is Lee Klaskow joining from Bloomberg Intelligence. Let's head over now to Nancy Lyons. She's got world and national news here in our 99.1 newsroom in Washington.
Thanks, Kaylee. Wayne LaPierre, the embattled longtime leader of the National Rifle Association, is stepping down. The 74-year-old LaPierre is citing health as the reason for his decision to leave, but it does come on the eve of a civil trial where the New York Attorney General is seeking his removal for alleged corruption. Treasury Secretary Janet Yellen is encouraged by today's jobs report that shows another month of job gains and wage increases.
What we're seeing now, I think we can describe as a soft landing, and my hope is that it will continue.
Yellen made those comments on CNN. She says she's especially encouraged to see the average hourly earnings for the year were up 4.1% and ahead of projections for inflation. Southern California has been hit by a magnitude 4.1 earthquake this afternoon, centered just east of Los Angeles. No damage has been reported. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Jobs Friday. It has been a choppy trading session, but we are looking at gains right now for the Dow, the S&P, NASDAQ 100 index. Russell 2000, though, it is in the red. Little change, down less than 0.1%. Here's where we stand. The S&P now at 46.95, higher by 6 points, up by about 0.1%. The NASDAQ Composite Index up 17, a gain now of 0.1%. Dow Industrials up 11. That is a gain of less than 0.1%. 10-year yield 4.03% with a 2-year at 4.38%. Spot gold up $3 the ounce to $2,046. That is a gain of 0.2%. Crude oil is advancing 2% now, $73.67 a barrel. So the S&P 500 index is edging higher in what is shaping up to be the S&P's worst week since late October. December's robust jobs report is reinforcing the Fed's stance on interest rates. And with that story, here's Bloomberg's Vinny Del Giudice.
Payroll growth accelerated last month with a gain of 216,000 jobs as unemployment held steady. Fed officials have signaled they'll hold interest rates at current levels until they see further evidence of moderating inflationary pressures like wages. The resilient labor market is fueling steady consumer spending and healthy economic growth, suggesting America's economy could skirt a recession in 2024. Vinny Del Giudice, Bloomberg Radio.
So the jobs report, certainly the big story today, but 1 week from today, next Friday, bank earnings will be our central focus. We'll be hearing from J.P. Morgan Chase, Citigroup, Wells Fargo, and Bank of America. Shares of the banks all higher right now. J.P. Morgan Chase up 0.6%. Bank of America up 1.9%. Wells Fargo up 1.7%. Citigroup up now by 1.2%. Again, recapping, stocks are higher. We are on track for a losing week, but the S&P right now higher by 6 points, up by about 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Sound On Bloomberg Radio.
Welcome back to Sound On, and congratulations. We're almost wrapped up with the first working week of the year. It's been a long one, and we've had a lot of news from the 2024 race to congressional politics to even the world of higher education, as it was this week that Claudine Gay announced her resignation as the president of Harvard. Her resignation, of course, followed growing pressure on her, stemming in part from congressional testimony back in December she gave regarding anti-Semitism on the Harvard campus and also allegations of plagiarism. The story doesn't necessarily end here. There is an ongoing conversation about anti-Semitism and speech on college campuses. It's probably not over at Harvard. And I know that that is something that David Weston, the host of Wall Street Week, actually spoke about with the Secretary of Education earlier today. And I'm pleased to say David is with me now. So, David, what did Secretary Cardona tell you?
How about that? Actually, somebody came from your neck of the woods all the way up here to New York. That is Miguel Cardona, as you say, is the Secretary of Education. Well, I started out asking about exactly what you just identified, which is the turmoil on college campuses, including the administrations. And he said, Secretary Cardona said, first, of course, the first priority is the safety of the students. But then he went on to say there's more that we expect out of higher education.
We need to make sure higher education institutions are places where students can grow, find their passion. And what we're finding in many cases is, people talk about academic freedom, and that's under attack. And we have some very extreme Republicans right now that are looking to higher education to continue their culture wars, as they've done with book banning. What we're focusing on is affordability, access, making sure students are completing, improving the return on investment in higher education.
So you heard it there. The Secretary is certainly concerned with making sure we have an open discussion on campuses, but he actually is particularly focused on that affordability question and how expensive colleges have gotten to be and the difficulties in students being able to afford the tuition and to make sure it's worth it. I think that's really, he suggested to me, the center of his administration.
Well, of course, the Biden administration has been pushing to relieve student loan debt. It's had some legal issues in attempts to do so, but at the end of the day, it is just sheer affordability that is the root cause of the problem, David.
Yeah, and the Secretary said essentially, it goes beyond just what happened with the pandemic, which triggered, of course, some of the forgiveness that went all the way to the Supreme Court, and that's still before Congress about whether they're going to do something. He said it goes beyond that. It goes way back, that in fact they inherited what he called a mess. He said it's been a mess, and they're going to have to go back and straighten the whole thing out. And we talked to him about whether people are repaying their loans now, that they don't have that forbearance that they had. And he said they're up to about a 60% rate. It was about 70% before the pandemic. They're trying to get it back all the way up. But they really are trying to work with schools, including the for-profit as well as the not-for-profit, Kaylee, to really make sure that it is affordable and makes sense for these students.
Okay, so trying to fix the mess, perhaps, of our higher education system. Speaking of things that could be a mess, David, let's also talk about this 2024 election cycle, because I know you actually spoke with the former Treasury Secretary, Larry Summers, earlier today as well, and he's pretty worried about this election.
Yeah, it's actually something we started with Wall Street Week. We're going to try to do it every week, talk to somebody who's somehow associated with Global Wall Street to say, apart from anything else going on, what is the choice between the two candidates, whoever they end up being, but we think we have a hunch we might be. What does it mean for Global Wall Street? What does it really mean for us, particularly the Bloomberg audience? And we started with Larry Summers, the former Treasury Secretary, today. And one of the things he emphasizes what this might represent to the rest of the world about the way we run our country. This is part of what Larry had to say.
We're prepared to see a first Trump term as an aberration. But after 91 indictments, after the events of January 6th, that is not how they will see a second term. That is not how they will ever see America again. That will represent a loss of the moral authority that the United States has had since it won the Cold War, since it won the Second World War. And that will, I think, make for a much less stable world.
Now, we all know, Kaylee, that Larry served in a Democratic administration under Clinton and then again under Obama, and he's made no secret of the fact that he tends to go left of center. So it's not surprising to be critical of Trump. But in his conversation with us, he said, look, he has disagreed with Biden about how progressive he's been in some respects with respect to economic regulations. And he specifically said, look, I would not be saying this if this were about Nikki Haley. I would not be saying this about Chris Christie. So it's not just a Democrat-Republican thing. He thinks that there's a much more profound issue here if President Trump comes back to office, because it will not entirely be like the first time around. It may be more extreme than before, and it could really have some negative effects, in his judgment, for the economy overall.
Yeah, it's fascinating, David, and certainly a conversation we need to continue to have throughout the remainder of this year. Just a final note on the economy, though. Did he tell you anything about how strong he feels it is, especially after a jobs report like the one we got today?
Yeah, well, we talked to him about that jobs report, of course, and he did say it does look strong, and it is stronger than he might have expected at this point. At the same time, he said he thinks the Fed is doing it just right because there are still risks. There are some things under the surface that may be still troublesome, and they're going to have to take it step by step to decide how far and how fast to go. He does not think there's a lot of pressure right now for rate cuts. He said that can come, but there's not a lot of pressure for that. We're certainly not seeing that yet, at least what was the way he would put it.
All right, well, I look forward to hearing more of your conversation with Larry Summers on Wall Street Week this evening. Who else are you going to have on the program?
So in addition to Larry Summers, we've got, I think, a fascinating economist from MIT named David Autor. He's done a fair amount of early work on generative AI and how it may transform, particularly the labor markets. He admits it's early going, but one of the things I really liked about it, you'll hear it tonight, but he said, you know, if traditional computing is sort of like classical music where you play the notes on the sheet, actually what AI is more like jazz. It's improvising in ways that you can't possibly anticipate. You might not have gone there. And as a result, we need to be cautious about how we use it.
Yeah, I'm not sure I like the idea of robots just like riffing.
That's right.
That seems like it could be a little dangerous. But David, we will leave it on that note. Everybody make sure to tune in to Wall Street Week this evening on Bloomberg Television. That's at 6 p.m. Wall Street time, right after Balance of Power, and of course hosted by our very own David Weston. It's always great to see what interesting guests he has on the program, though I'm really not sure about the AI thing. Makes me nervous, these robots. I don't think robots should play jazz music. There's real musicians for that. Clearly I have Friday brain right now. We're almost done here on Sound On, I promise you. Just stick with me a few more minutes, because there is a lot that's coming up through the remainder of the month of January. I'm going to run you through some of the dates you need to know. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Shares of Medical Properties Trust are down 31% as the company says it is taking steps, including providing some funding to recover uncollected rents from a struggling tenant. The real estate investment trust, focused on healthcare facilities, disclosed in a statement that it is taking steps to recover unpaid rents and outstanding loans to Steward Healthcare System, one of its tenants. Again, we've got shares of the company right now, Medical Properties Trust, the REIT, lower by 31%. Apple is off to its weakest start to a year since 2019, putting its long-standing status as the world's most valuable stock by market value in jeopardy. And with more on the story, here's Bloomberg's Denise Pellegrini.
Charlie, Apple has been the most valuable publicly listed company since July of 2022, but the stock has fallen sharply this year so far after the tech giant was hit by 2 ratings downgrades this week. Analysts are flagging weak macroeconomic environment in China, pressuring demand for iPhones. And this has all shrunk Apple's lead over another big tech stock, Microsoft, whose shares have seen a less pronounced decline. And now the gap between Apple and Microsoft is just less than $100 billion. According to data compiled by Bloomberg, Apple has seen about $164 billion in market value erased so far this year. Charlie.
And that's Bloomberg's Denise Pellegrini reporting. Apple shares shares down now by 0.7%, 180.66. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Sound On Bloomberg Radio.
We're almost wrapped up for Sound On this Friday and on the week. First, though, let's get you a check on what's making news, both nationally and throughout the world. Nancy Lyons has that for us in the 99.1 newsroom here in Washington. Hey, Nancy.
Thanks, Kaylee. This afternoon, President Biden will be delivering his first speech of this election year at Valley Forge, Pennsylvania, where George Washington mobilized troops during the Revolutionary War. He'll be focusing on what he sees as the current battle for the country to preserve democracy and freedom. Quentin Fulks is Biden's campaign manager.
Valley Forge brought those, colonies together to protect democracy. This campaign is going to need to bring together all the constituencies that came together to send Joe Biden and Kamala Harris to the White House in 2020 to make sure that we defend democracy once again and hopefully put this dark chapter that is Donald Trump and the MAGA Republicans behind us.
Today's event was originally scheduled for tomorrow, the anniversary of the January 6th Capitol riot, but was rescheduled due to a winter storm that's heading for the region. As for that storm, Bloomberg News weather analyst Brian K. Sullivan says the eastern seaboard could get the most snow it's seen in years.
It's probably the biggest one we've had in almost 2 years. So we've been under kind of a snow drought for the last 2 years.
Sullivan says the snow will likely skip Washington and Philadelphia, but will likely impact New York and Boston. The longtime leader of the National Rifle Association, Wayne LaPierre, told board members today that he's stepping down. His resignation comes on the eve of a corruption trial in Manhattan in which the New York Attorney General, Letitia James, was trying to remove LaPierre from his job. She's also seeking financial penalties in that case. He was half of the fighting TV duo Starsky and Hutch. 80-year-old David Soul has died. Soul also had a hit on the music charts with this song.
Don't give up on us, baby.
David Soul's wife says he died surrounded by his family. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Kaylee.
All right, Nancy, thank you so much. So as I said, I promised I would. I got to run you through everything else that's happening in the month of January because it's going to be a lot. As Nancy mentioned, we will hear from President Biden shortly. He'll be speaking in Pennsylvania. He'll also be speaking from South Carolina on Monday being January 8th. That's also the date the Senate returns to Washington. The House comes back on the 9th. And also on the 9th, the D.C. Circuit Court will hear oral arguments in the Trump immunity appeal. This is essentially Trump arguing that he should be immune from prosecution as a former president. Trump himself says he will be at that court. Then on January 10th, CNN will host a Republican debate in Iowa. Only Trump himself, Ron DeSantis, and Nikki Haley qualified, but it'll only be DeSantis and Haley on the stage. Trump instead will be counter-programming with a town hall on Fox that evening. And of course, all of that takes place just days ahead of the Iowa caucuses on January 15th. The all-important first real contest in this 2024 Republican primary race. And we'll only have a few days to digest those results and what they mean before it's New Hampshire time. On January 18th, ABC News will host the Republicans for a debate in New Hampshire. We'll see who's on the stage if Trump deigns to appear at that one. There will be another debate hosted by CNN in New Hampshire on January 21st. And in between those two, we have to talk about Congress again, because on January 19th, government funding runs out, at least part of it, the first tranche of government funding, and Congress will be racing to try to avert a shutdown at that time. Although if it's tied to border policy, which it seems it might be, that effort could be a lot more complicated. And then, of course, on January 23rd, it will be the New Hampshire primary. So it's going to be a very busy month, guys. Of course, I will be here, as well as Joe Matthew, who's coming back on Monday. We'll be here to run you through it, not just here on Sound On, but on Balance of Power as well. You can find me there tonight at 5 p.m. I'll be talking with Jared Bernstein of the Council of Economic Advisors about today's incredibly strong, or at least surprisingly strong, jobs report. And I'm sure they're going to have more on that for you on Bloomberg Business Week, because yes, Sound On is over. Have a good weekend, everyone. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
We made it. The first trading week of 2024.
We have not made it yet.
Yes,
I don't want to. I'm not trying to like rain on the parade.
Come on, an hour left in trading.
Hour left in trading.
What could happen? Tim, what could possibly happen?
3 hours left in our program, though.
There are.
We're just getting started.
We are live from the Bloomberg Interactive Broker Studio on YouTube on Bloomberg Originals. Yes, TGIF Friday, January 5th, 2024, Jobs Day. And again, Tim, nothing urgent here for the Fed to act on. In particular, no need to cut rates sooner rather than later. I would, if anything, say just maybe higher for longer.
Where have you heard that before?
I
thought the same thing when I saw that. I mean, and investors are thinking that it's higher for longer too. No longer pricing in 6 rate cuts now, saying, okay, now it's going to be closer to 5 this year.
I'm already on to next week's CPI report.
Yeah, more on the economic news and the volatile trade off of it. Stock's kind of moving all over the place.
Yeah.
We're going to get to that in just a moment.
Yeah, looking forward to talking about the jobs report, but really, you've seen the Treasury trade, that 10-year, up above 4%, down below, up above it again, so it's been all over the place. Also, one of the big themes of 2023, Ozempic, all of those new weight
loss.
Weight loss. I can't think of it. Thank you very much.
People aren't taking them to gain weight.
No. But what's interesting is the mania over this. You're creating billions in bills and for state coffers, and so we're going to dig into that specifically.
So are we paying for these drugs?
Well, that's a good question, right?
Yeah, that is.
It's a most read story, so we're going to get to that in just a moment.
Also a most read story is one on David Tepper, who went all in on 2 trades last year. One of those quietly helped him make about $2 billion. The other has gone south in a very public way.
Quite a gap there, so we're going to dig into that. Plus, TikTok eyeing Amazon's turf. You've also got chatbots making stuff up. Has been a cause for alarm, but there are apparently advantages as well.
Yeah, we're going to get all in on AI hallucinations, especially the helpful ones.
AI what?
Hallucinations.
What?
Yep, that's right.
All right. David Weston stopping by as he gets ready for Wall Street Week. Man, what a full plate in this first week of 2024 for Wall Street Week.
We'll also be joined by entrepreneur and author Mike Mikulowicz on leading and building unstoppable teams.
Like, I'm thinking about that as we get ready for earnings season. 1 week from today, we'll be all over JP Morgan and some of the other big banks reporting.
It's like almost every bank reporting next Friday.
Well, and I'm thinking about these CEOs who are worrying about cost pressures, looking at the environment, thinking about their teams. Look at Citi, right? Scaling back in terms of its major restructuring and rethinking some of the teams. So that's going to be a good and topical conversation. All of that to come right now, though, over to our TV colleagues. Bloomberg's Countdown to the Close starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the Countdown to the Close. Scarlett Fuish and Ali Bassick here. We're joined by our colleagues Carol Masser and Tim Stenivek. And in doing so, welcome to our full Bloomberg audience across television, radio, YouTube, and those streaming on Originals via YouTube, via our different platforms.
Right?
We're everywhere, absolutely.
Yeah.
Happy Jobs Day to you guys.
Happy Jobs Day. And having said that, we've got a really topical story because there might be less jobs for truck drivers. A really fascinating story by our Thomas Black on the Bloomberg Terminal, and talks about how these driverless trucks are coming on maybe some highways in Texas next year. Basically, we're talking about you've had these driverless trucks, but they've always had a co-pilot. Well, maybe those co-pilots are going away. There's a couple of startups, Aurora Innovation, Kodiak Robotics, and Gatik, I think AI, I hope I'm saying it correctly. But they've got all these sensors. They're ready to go. So bring it on, Tim.
Yeah, they use cameras, they use radar, they use LiDAR to essentially do what driverless cars do. Here's a bit of a difference, though. Okay, they're quite a bit bigger than a driverless car. So you think about the typical driverless car. These trucks are traveling at highway speeds. They weigh as much as 80,000 pounds.
Yeah.
And they're more than 15 times, that's more than 15 times as much as a cruise driverless robotaxi, for example.
No room for error, right?
Zero room for error. Guess who's not happy about this? Truck drivers.
No.
International
Who would
Teamster
be?
Union, right? The union
But
of
at the same
Teamsters
time,
not
haven't
happy
the
about
truck
this.
driving companies, the trucking companies had a hard time hiring? They couldn't find enough people.
They have, but, you know, there's like, you know, Mike McKee's going to be joining us in just a minute. He could tell us exactly how many truck drivers there are in the U.S., but there are tens of thousands. So It's a big deal.
Yeah, it's not the only place we're seeing technology really take a hit when it comes to the job market. We were thinking about AI and we were thinking about the writer's strike earlier this year. But, you know, there are positives in the job market when it comes to technology as well. Maybe not with AI. I want to talk about real estate, actually, because, you know, TikTok is actually a great place to get a job for a lot of people. And if you think about it, real estate has been a hot and heavy market, as we know. And you want to hear something that's happening, guys?
Sure.
You're watching Gen Z really look to start to take to the internet, flooding people with tips on how to flip and sell properties. Of a woman who was making $2,500 on a Hollywood set and then made about $100,000 in commissions from selling properties from October because Gen Z now is apparently the hot to be selling real estate.
I guess it depends on what market you're in, right?
Yeah,
if you're in a hot
exactly.
property market, sure, you could do that. But if you're not and you're fighting for listings and you can't get a listing.
Eye-opening.
Well, I think what's also interesting about this story is just the changing face of a realtor here in the United States. I mean, according to the National Association of Realtor, the typical realtor is above the age of 60 and a woman with a college degree. So, look, this happens when generations start doing new things and when people get new jobs. And the way that young people are getting into this is a different way than, older generations got into it thanks to technology that's available now that wasn't available a few years ago.
You almost said the way that we do it, Tim. I saw that.
Not me.
Nobody on this panel, I've got to say, is Gen Z. I don't believe.
Nope.
I didn't buy a house through TikTok.
Barely a millennial.
Yeah.
I don't have a house.
But I think what's interesting, these conversations we're having, and especially in a year where, once again, artificial intelligence, the next generation, is going to be a big part of probably the investment landscape and just the general landscape overall. So you do wonder, how does this next wave of technology kind of impact our labor force on a day when we've been so focused on it? A week, really.
And how do you buy
feel?
a house if you're in Gen Z or a millennial?
How would you guys feel if you were on the highway and a truck passed you and there was no driver in it?
Oh my God.
Or if
I'd
you
be
passed a
terrified.
truck, which would
I
be more
feel
likely 'cause they're
sad
kind
or
of gonna go
scared
less than the speed
sometimes on a
limit?
New Jersey highway when there are drivers.
Yeah, the New Jersey Turnpike with the truckers is a little scary, I'll say that.
There's some pressure on these startups. Their investors are like, listen, we've been funding you, you've been testing, we're losing money, we want to make money, so let's get it out there. And they've got some big partners, Walmart, Kroger, Tyson Foods, so let's see if they actually hit the highways.
The interesting thing about that whole story, though, it's state by state, right? Like, this
Correct.
doesn't happen in California, but it'll happen in Texas.
Yeah, the federal government's like left it up to each state, so there's this patchwork of regulations. So
wide open spaces. Okay. We can do it there. All right, guys, we're going to continue our conversation. Wrap up the first trading week of 2024. We'll be back in less than an hour's time. Radio, TV, YouTube, Bloomberg Originals. Join us at 4 p.m. for Beyond the Bell.
We can work it out. We can work it out. Life is very short.
We can work it out. And it feels like the labor market, I don't know, the economy may be working it out because it's kind of interesting. We did get, as you all know, the latest monthly read on the U.S. jobs market. Bottom line, Tim, U.S. job growth picking up last month in December, wage gains exceeding expectations, diminishing prospects for an imminent Fed interest rate cut. Those expectations paring back just a little bit today.
Okay, so we should go through the numbers. You've heard them before if you've been listening throughout the day. Payrolls, non-farm payrolls increased 216,000. There were some downward revisions to the prior 2 months. The unemployment rate held at 3.7% because the workforce shrank. Average hourly earnings rose 0.4%, Carol, from a month earlier.
All right, so let's get to it. Markets have moved around just a little bit of volatility today on the news. With more Bloomberg News international economics and policy correspondent Michael McKee back with us, along with Bloomberg News rates reporter Michael McKenzie, also back with us, both in our Bloomberg Interactive Broker studio. Thank you. We're going to do Mike and a Michael. That's how we're going to keep
Mike
it.
and Mike.
They're in studio. We just
better than the Mike and Ike. Okay, I like Mike and Mike.
Mike and Mike in the morning.
Love it.
Used to be a thing.
All right, Mr. McKee, you've been up early. Heard you breaking it out on radio and TV this morning. So, okay, there's still job creation.
Yeah, we woke up this morning and Manus Cranny asked me, it's Jobs Day. Is everybody excited? And I said, no, most of America is just getting up and ignoring Jobs Day because they got to go to work because everybody's employed.
That's a good thing.
That's a good thing. Oh, by the way, Tim, 1,586,300.
Oh, truckers?
Truck drivers in America.
Okay, so that's many tens of thousands. How's that?
Many tens of thousands. But anyway, I mean, the numbers are pretty good. You have to subtract the 71,000 jobs that were revised out of the October and November numbers, so you get a net gain of 145. But that's still pretty good for the overall economy. There were some weird things in here. The jobless rate didn't move because a lot of people left the labor force.
Why did they leave?
Participation, right?
Nobody knows. It may be noise. There was a big flow in from out of the labor force into the labor force in November, and it sort of reversed in December. And maybe it was just that you got to the end of the year and a bunch of people retired, or people just decided to take the holidays off.
Yeah.
And not be searching for a job. But the number of people who reported having a job and losing it in the household survey was only 6,000. So it wasn't because people lost jobs that unemployment was unchanged.
Having said that, really fun to watch what happened in the Treasury trade right after Michael McKenzie, right after that report came out, because we did see a spike in rates.
Yes, we did. Close to 10 basis points on the day, and then very quickly the buyers turned up. And
What happened?
Well, I think investors like Rick Reeder, who was speaking on Bloomberg TV after the jobs report, put it quite nicely. So I want to see a bigger backup. I want to buy. And I think there's just this appetite to buy yields when they're above 4%, particularly in that 5 to 10-year area. And yeah, we priced out rate cuts. We got back to 50 odds, and we bounced back a bit. We're still pretty much pricing in, close to 6 rate hikes.
Still close to
six rate cuts for this year. The market looks at the job number and go, okay, it's a good report, but it's just one report. They know there's still a couple more to come before the Fed meeting in March. So I think it makes, plus you got the inflation data next week.
March is a long way.
It's a long way. So I think what you've got here in the bond market is a dynamic that said, when we got to 5% in October, people didn't know if that was a top or not. But they said, I got to buy, because historically, 5% in 5 and 10s, that's great, particularly in 2s as well. And now they're looking at 4% saying, I still got to buy, because we just don't know. And again, what we do know, though, is that this is a Federal Reserve that since mid-December said, we are going to be cutting.
So 4% could be as good as it gets.
It could be. I mean, talking to a couple of investors this morning, they said to me the key level in the bond market is 425. That's where 5 and 10-year yields are trading when Powell began speaking at the press conference last month, and did the dovish pivot, and more importantly, did not push back on any journalist saying, hey, do you want to talk down and push back on this bond market that's been rallying hard? He didn't. So for them, 425 is kind of, if we get there, definitely want to buy. But anywhere between 4 and 425 is kind of the buy zone for now.
Michael McKee, how much of the move down in yields today, or just the reaction that we saw after 9:30, had to do with the other economic data that we got, the ISM Services Index coming in a little cool?
It's almost a better question for Mike, because he's been talking to people in the bond market, but you had the ISM number come in touch weaker, and the jobs number, which everybody seemed to focus on, was very weak, although it wasn't, the service job number in the payrolls report wasn't very weak. Prices paid went down some. What was really interesting is this morning, I came in early, obviously, as Carol mentioned, and we got the European CPI numbers. And all of a sudden, the headlines are traders push back on rate cuts by the ECB. And then you had the same thing, same kind of headlines after the jobs report. And then this ISM report came out, and in the US and in Europe and in the United Kingdom, which didn't have any numbers today, everybody did a U-turn, and they all went back to saying, okay, we're going to stick with this idea that the central banks are going to be cutting. They're going to be cutting starting in March, and they're going to be cutting a lot.
So I feel like in terms of the trade, like as you say, there's kind of levels people are watching. Yes. And I feel like there's kind of, side rails a little bit on the trade here. And until we get to that March meeting, maybe when we get then the Fed maybe coming out again and maybe saying something that is a little bit more definitive for the markets? Is that
possibly?
Kind of
I think the odds still favor that the Fed, if it doesn't have to ease in March, if the data doesn't materially slow, they're going to wait as long as possible. And so I think some people kind of see May, June as a better time frame. That said, we're going to get the CPI next week. And a lot of the focus in the bond market has been how, if you look at the 6-month annualized pace of core PCE last month, that dropped to 1.9%.
Right.
That's kind of what the bond market's looking at. They're taking these 3-month, 6-month annualized figures and going, actually, they're in the zone now. And
But it's got to stick there.
But it's got to stick there. So I think CPI next Thursday is going to be very important here.
Yeah, probably more important than the jobs numbers.
Yeah, I'd actually, and a few people's actually told me that. They said, look, Mike, yes, the wages were a bit of a blip today, but it's CPI, and is the direction of travel in inflation going to stick to that 2% target? Because it gets back to, even if the economy is growing at, say, 2.5% this year, 2% inflation, they get you like 4.5% on a 10-year. So we're in that zone, and that's where the bond market's kind of likes to see things.
Why, Mike McKenzie, is the focus on March rather than January for the Fed meeting?
I think
not necessarily. I don't mean for cutting in January. I just mean we'll get more insight into what Jay
because
Powell
it's enough of a runway for the data. It's enough of a runway for you to say, okay, it's a coin toss whether they cut or don't, and we've still got enough data for that to work as a trade. I mean, it's very tough sort of working on a 1 week trade or a 1 day trade like they do in options now in the equity market, right? That's a real kind of roulette wheel type thing. But when you've got a couple of months, you can kind of, you're going to ride the swings in the data, and you can sort of, it's all about the odds. It's all about what are the probabilities here. And I guess at the moment, we're early into the new year, we've had a sell-off in the bond market.
Right.
We've risen about 25, 30 basis points from the lows of late December. And that was needed because we did rally too hard after the Fed meeting last month. But now it's really about, okay, it's 50-50 odds for March. And then if they don't go in March, then it's going to switch towards May and June because, again, you get another bit of a runway and the bond market can go, okay, it's time to play the odds again.
Well, I just got to say, Mike McKee has a great story that he's been sharing with us about coin toss flips. We're not really 50-50. I don't know that we have time, but is it a coin toss? Treasury Secretary Janet Yellen
Don't say coin toss.
really quickly had achieved, she said the U.S. economy has got its long-sought soft landing.
Yeah, does that remind you of anybody? George W. Bush, mission accomplished.
So
I don't know that I would have gone there as she did. You'd want a little more evidence, I think, but
not quite there.
Not
50-50
quite
coin
there.
toss?
The coin toss thing was a fascinating. Scientific American article. They showed that there's a 51% chance that the coin will come up on the side that it is on top when it's flipped, and only 49% that it will be on the other side, and it has to do with the rotation of the coin in the air and stuff like that.
You only had to flip the coin 400,000 times.
They did. That's what they did to figure this out.
Read the story you sent.
You thought we were nerds.
We're all nerds. Michael McKenzie and Michael McKee, thank you so much.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a headline right off the Bloomberg Professional Service. Southwestern Energy, and Chesapeake Energy said to be close to a merger that would create a roughly $17 billion company, ranking as one of the largest natural gas producers in the United States. Shares of both companies are moving higher right now. We do have shares of Chesapeake Energy Corp. up by 1.5%. In the meantime, Southwestern Energy is advancing up now by 9.5%. It is now a down day on Wall Street. It's been a very choppy trading session as we wrap up what is likely going to be another or a losing week for the S&P 500 index, snapping a 9-week winning streak. The S&P right now lower by almost 2 points, down by about less than 0.1%. Little change, but nonetheless in the red now. Dow Industrials down 24, lower by 0.1%. Nasdaq Composite Index down 19. That is a drop of 0.1%. 10-year yield, 4.04%. The 2-year, 4.39%. Spot gold, little changed, up 79 cents the ounce to $2,044, while we do have West Texas Intermediate crude up 2.3%, $73.81 a barrel. Bitcoin now down by 1.8%, 43,706 on Bitcoin. Jobs Friday. As for what today's jobs report means for the rate cut outlook, Anna Wong is chief U.S. economist at Bloomberg Economics.
So basically, even though no rate cuts are here yet, de facto, Powell's dovish words translated to half of 25 bips rate cut, and that could support the unemployment rate by at least 0.2 percentage point through 2024.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. So certainly today, the market is focused on the jobs report, but 1 week from today, it'll be all about banks when we hear from JP Morgan Chase, Citigroup, Wells Fargo, and Bank of America. Those bank stocks are advancing today. Right now, we've got JP Morgan Chase up 0.5%, Citigroup up 1.2%, Wells Fargo up 1.5%, Bank of America up 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week. Carol Massar, Tim Stenovic live here at Bloomberg headquarters in New York City. Hey, you know, it does feel like the energy sector is on fire, no pun intended, but man, the last year or so, we have seen what is in October, ExxonMobil striking a $60 billion deal for Pioneer Natural Resources, followed by Chevron's $53 billion deal for Hess. Occidental Petroleum in December said it would buy Permian producer Crown Rock for nearly $11 billion. And this past week, oil producer APA said it had agreed to buy smaller peer Callon Petroleum. That deal about $2.6 billion. Wall Street Journal, though, out with a story. Charlie mentioned this.
Yeah, Southwestern Energy and Chesapeake Energy close to a merger that would create a roughly $17 billion company, ranking as one of the largest natural gas producers here in the U.S. I'm reading right from this Wall Street Journal story, Carol, that this could create a near $17 billion company.
Yeah, and I was just breaking down some of the deals courtesy of Dow Jones. Southwestern Energy folks up 9.2%. Probably should add it to my gainer list when we head over to our TV colleagues.
You got time. Don't worry.
But it's interesting. I'm looking at our MA function on the Bloomberg, and in terms of energy deals year over year, they were down about 23%, which I find kind of interesting, but it probably pulls in a lot. But we have seen some really big deals, you know, whether it's kind of your integrated oil companies. This would be a natural gas deal. It's kind of interesting. Again, not a done deal, right? It's just according to people familiar, according to Dow Jones. But nonetheless, a lot of move in a world where we are continuing to move towards alternative energy. But we've also seen many people continue to say about the importance of fossil fuels.
This is a cool function that I have not played around with.
The MA function?
MA.
It's fun.
Yeah, that's really cool. Check it out on the Bloomberg terminal. Hey, in the meantime, Carol, we continue dissecting and reading into today's monthly read on the U.S. labor market, getting our latest monthly government read this morning. We just spoke about it with Mike McKee and Mike McKenzie. The December figures cap a year where the labor market moderated from its breakneck post-pandemic recovery, Carol, without sinking into a downturn that was widely forecast earlier last year. I mean, we were sitting here a year ago and everybody was telling us this is going to be the year of a recession.
Yeah, it's really kind of interesting. So for more on what she is seeing when it comes to labor trends, we welcome Joni Biley, Chief Workforce Analyst at the U.S. industrial staffing firm Employee Bridge, on Zoom from Pompano Beach, Florida. Joni, good to have you here with us. Welcome, welcome, welcome. Tell us a little bit about, though, your firm. You know, there's lots of staffing firms out there. What particularly do you guys specialize in?
Yeah, so Employee Bridge is actually the largest industrial staffing firm. So we are supplying talent really to the supply chain. So very focused on manufacturing, logistics, really anything though that touches supply chain. Like we also do a tremendous amount of staffing in call centers and contact centers across the country. But many, thousands and thousands of companies use temporary labor on a daily basis, and they really turn to Employee Bridge for their workforce solutions. It provides them flexibility.
Supply demand, basically, right? If something's busy, they can just pull in workers.
Yes, and I think that's why, media and economists always look to the temporary staffing industry as a barometer, of what's really happening, because employers will turn to firms like ours, Employee Bridge, when they need to ramp up, or certainly if things are slowing down. Usually temporaries are the first, first to go. And that is one of the concerning things that we have seen in this December jobs report. When you look at the breakdown of the sectors, and I always tell people this, the headline number might look great, to see 216,000 jobs being created. But unfortunately, the job growth in the temporary help sector actually declined again. We saw a loss of 33,000 jobs. So that is telling us that employers are letting temporary workers go first. Of course, they're trying to hold on to their permanent workers. So that is not a great sign for the economy. That temporary worker number can usually be a leading indicator, whereas the overall job report sometimes, as we know, is a lagging indicator.
So how does what you're seeing recently compare with what we've seen over the last year or so? I mean, put it in context for me and for our viewers and listeners.
Yeah, I think, again, it comes back to the overall numbers. We're still in a very good, solid job market. But I think what we've seen in 2023 has been a lot more stabilization, maybe a bit of normalization in the overall job market. So, this year, as we look at, 2.7 million jobs added, to the economy for 2023, that's a good number, but it's significantly down from almost close to 5 million in 2022. So things are still, they're very, I wouldn't say it's robust as it was in 2022, but it's still a good job market. Unemployment's very low. Many companies are hiring. But when you break down the numbers, that job growth is really only happening in a few sectors. So you're seeing, of course, government has been very strong for the last few months. Healthcare has continued to remain strong. That's been that way for years. And I would say it's going to continue to see growth in healthcare sector jobs.
Joni, what's the biggest part of your business in terms of what area? You mentioned manufacturing, logistics, call centers. Which is the biggest that you tend to find the most activity in, generally speaking?
Yeah, definitely logistics, still is, one of the biggest areas. We also have a division which is called Pro Drivers that does, of course, transportation and CDL drivers. There's still a very strong demand in logistics, but it is down from where it had been in 2022 and certainly 2021 when it came back so strong. So the demand is certainly still there. The energy sector.
Hey, Joni, I'm going to ask, I just want to jump in real quick because we don't have a ton of time. We just did this, it's among the most read on the terminal today. Driverless truck companies are planning to ditch human co-pilots this year in Texas. How is that on your radar, given that there are more than 1 million truck drivers here in the U.S.?
Yes, but you know what's so interesting about that is We're still waiting, of course, for a lot of infrastructure. I think where we see a tremendous amount of opportunity is you still will need drivers for once the freight actually arrives, there's still going to be a lot of driving.
So like the last
local
mile,
driving.
kind of it's the same
The
last
mile. Yes, exactly. You're exactly right. So there is still going to be a very, very strong, strong demand. And you think about even drivers, right, with Amazon, it's hard to even imagine, life before Amazon. We're just all so used to ordering whatever we want and it shows up, right at our front door. And that really is that, last mile driver.
Joni, before we go, 30 seconds. One of the things that you guys shared in some notes with our producer is that second jobs will increase in 2024. Just quickly, why? And again, only about 30 seconds here.
Yeah, we're still seeing with inflationary costs, people are looking to make additional income. So gig work, driving, looking for part-time work. And it really has been driven by inflationary costs that people are looking to work. We're seeing labor participation continue to increase. And we do think people are going to be looking for those second jobs so they can earn some more money to basically put food on the table.
Yeah.
But it's still a decent job market. And there are opportunities out there, in all sectors. But things are softening.
All right, good, nice bottom line perspective on that. So appreciate it. Joni Biley, she's Chief Workforce Analyst, at Employ Bridge, joining us from Florida.
Hey, let's get a check on the latest world and national news. For that, we go to, not Florida, we go to Washington, D.C., where Nancy Lyons
We want to go to Florida.
Wish I was in Florida.
I know, especially ahead of this weekend's storms, Nancy.
That's right. Well, members of Congress and leaders of civil liberties organizations are not in Florida. They commemorated the third anniversary of the invasion of the Capitol by assembling today on the Capitol steps. Bloomberg's Irv Chapman has more from Washington.
Congressman Jamie Raskin, ranking Democrat on the Judiciary Committee, described the event as an insurrection, an attempted coup.
The political scientists tell us that the hallmarks of an authoritarian or fascist political party are that, one, they do not accept the results of democratic elections that don't go their way. Two, they refuse to renounce or they openly embrace political violence as an instrument for obtaining political power.
Raskin assailed the former president for his promise, if elected again, to pardon all of those convicted of taking part in the violence. In Washington, Irv Chapman, Bloomberg Radio.
Well, there was some positive economic news today. Job gains and wage increases in December exceeded expectations, and Treasury Secretary Janet Yellen says the U.S. has achieved a long-sought soft landing. It's a historically unusual event in which high inflation is tamed without significantly damaging the labor market. She tells CNN her hope is that the good economic news continues in the year ahead. Florida is getting the green light from the Food and Drug Administration to import cheaper drugs from Canada. More from Bloomberg Law's Ian Lopez.
Florida had pitched this plan about 2 years ago, but it had been tied up litigation. They weren't getting answers from the Biden administration on how things should go. And today, the Biden administration, to the surprise of many, came out and okayed the plan.
Bloomberg Law's Ian Lopez reports the pharmaceutical industry is already pushing back. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red. We are on track for a losing week. Choppy session. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are well off their morning highs, with the Dow currently down 36 points. S&Ps are down 2, while the NASDAQ is off by 18. The U.S. 10-year yield at 4.05%. Gold is up a point. Oil trading in the green, but Bitcoin is lower by 1.7%. Among the main 11 S&P sectors, leaders were financials and consumer discretionary. Consumer staples and real estate were under pressure. And leaders to the upside in the Dow, Verizon and Boeing, while UNH and Procter & Gamble led to the downside. In deal news, the Wall Street Journal reported that Southwestern and Chesapeake are near a $17 billion merger. And wrapping things up, Constellation Brands rose as much as 4.4% after earnings. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg. Type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
TikTok, everybody. We've seen this tune before, as our Bill Maloney was just in our studio talking about the trade. It's like deja vu all over again, because yesterday we saw a late day fade when it comes to the equity trade, and here we are
You
again.
just said we're talking to Bill Maloney, right?
Yeah, Bill Maloney.
Everybody follow Bill Maloney
Yeah.
on the Bloomberg terminal.
He's just kind of a cool
Squawk.
guy, knows the markets inside
This
and
guy,
out.
he knows everything. He comes in here,
Yeah.
and I can ask him anything.
I know. He's
It's
so
great.
funny. Like, right?
Yeah.
We talk about anything and everything. And he's like, yeah, well, let me tell you about this. And
He knows
gives us the
everything.
history. Anyway, late day fade.
Because he works starting
Day
at 3
two.
a.m. That's why.
That's true. He's
Yeah.
out of here.
He's not out of here. He's still here. I don't know what he's doing.
I guess he has to wait till the market close. You know who's also here with us is Tony Roth, CIO at Wilmington Trust. It is time for the drive to the close as we get ready to wrap up the week, the day, first trading week of 2024. Tony is on Zoom from Philadelphia. Tony, early in the game when it comes to 2024, but it does feel like we're kind of limping along here. What's of note so far in the new year for you?
Well, thanks for Tim Carroll.
Happy New
Thanks
Year.
for having me. I think that it's interesting. It feels a lot like October, where there was a no recession trade, and I think that coming into the beginning of the year with Atlanta Fed coming in for December at 2.5%, or fourth quarter, excuse me, at 2.5% now. Latest reading, having the labor market report coming hotter than expected. I think that there is concern the Fed may not hike to the degree the market is pricing in.
You mean
the stronger economic
cut? You mean
activity.
cut, right?
Cut, yeah.
Okay.
Excuse me. May not cut to consensus given the stronger economic activity, and it's very reminiscent of what we saw in October with the no landing trade. Now, I don't subscribe to that at all. I think that we're very much headed for a soft landing, and in fact, the labor report was a terrific labor report we had today, very much consistent with a soft landing, where you see enough jobs being created to actually be disinflationary from a demand side standpoint in the economy. In other words, more jobs, more people working enables for more real consumption and for a greater pipe, if you will, or straw of supplies of goods and services. So we're right where we should be from a consumption standpoint, but we moved so quickly in November and December, especially in the bond market, frankly, on rates, that anything that's going to provide a pretext for consolidation, I think is rational right now. And that's where volatility comes from in markets.
So if you're constructive and it sounds like upbeat, if soft landing is definitely your thinking and guiding thought when it comes to investing, would you be all in and buying on the pullbacks that we are seeing in this market?
Well, I would certainly be buying on larger pullbacks. What we're seeing right now are pretty insignificant pullbacks in the equity market, for sure. And when you think about what's likely to happen in 2024, there are two things that are going to drive equities one way or the other. One is going to be earnings, of course. And so we'll probably come in for 2023 in the high 220s, and consensus for 2024 is 245. That's not going to be an easy number to reach, even if we have a soft landing. And so we're going to need to see an economy that comes in probably closer to 2% for the year than 1.5% for corporate America to be able to reach consensus forecast on earnings. But even if it doesn't, the second thing that we're going to be looking for is 5 rate cuts, not 3, or rate cuts that in total equal 125 bips. And I think that that is quite likely. And I think that even if we don't get earnings where I'm describing them, the rate environment from a Fed and FUD standpoint is going to be sufficiently adaptive, if you will, to the environment and the disinflation that we will see probably the S&P end the year somewhere above 5,000, not a lot above 5,000. So we're not talking about very profound returns, but probably 5 to 10% for the year.
So about 300 points from where we are currently. But having said that, if you think that there's going to be 5 rate cuts by the U.S. Central Bank, seems kind of aggressive. We've talked about, okay, if the markets really believe the Fed can do 5 or 6 rate cuts in 2024, that means it sees some problems. And you talked already about anemic growth. I feel like when we start to get to anemic growth, it's very easy for anemic growth to become a recession and a bit of a downturn. So how do you square that?
Well, I think that it's important to look at real rates, as always, right? And right now, real rates on the front end of the curve are around just under 2.5%. And on the long end of the curve, the 10-year, the real rates are close to 2% after today's activity in the nominal bond market. So we are in an environment where as inflation continues to fall on both the headline and core basis, and our expectation is to continue to see that happen, and wage growth on an average hourly earnings basis in a monthly employment report does nothing to change our outlook on inflation. All of that suggests that in order for the Fed to keep up with falling inflation, they need to cut rates. Their failure to cut rates will, in a pace that keeps up with that inflation, will result in tightening. And so we want to see the year end with a real rate across the curve somewhere closer to 1.25%. And so with inflation falling, and given where I described real rates are now, you probably need to see around 5 cuts in order for the Fed to keep up.
So, Tony, how should equity investors play this? Because if you talk about this feeling a lot like it felt in October, you're sitting kind of pretty if you had some cash then and you deployed it at the end of October, because you saw 9 weeks of gains in the S&P 500. How should equity investors play this right now?
Well, there's always, short-term volatility, drawdown. To Carol's earlier point, if we get something more than 5 or 7%, jump in with both feet, because I think that that's really the story here, is that we're going to have a positive year on equities. It may not be like last year, but it'll be a positive year. In the absence of that, I think that equity investors need to be very selective. And I think the trade that we expect to see to continue to materialize is the broadening trade in the markets. So it's not just those 7 stocks, but it's a much broader set of stocks. It's quality stocks, it's financials. Later in the year, we would expect energy to start to rally once supply starts to dwindle in the marketplace as the global economy comes in stronger than expected. In pharma, we like bio, we like med tech. So there are areas in this market that are attractive. There are quality names across the market. There are those companies that are consumers of AI that are increasing productivity.
Right.
And it's a broadening trade, and it's going into small cap as well. And so
it sounds
really
like
a stock market.
It sounds like a lot you like, Tony, just in 25 seconds. So what about the Magnificent Seven, those that really were powering the market last year? Although we did have a broadening out. In just about 15, 20 seconds, would you commit new money to some of those big tech, and big cap tech names?
Only if I were underweight them. So I don't want to be underweight those names really ever, or at least I don't want to be underweight the group. There are certain names in that group that we like a lot more than other names, but as a group, those are the rails of the future of innovation and of not just our economy, but the global economy. So you don't want to be underweight them, but I also wouldn't be overweight them in this particular environment.
Got it. Hey, Tony, have a great weekend. Tony Roth, CIO over at Wilmington Trust, joining us on Zoom from Philadelphia. Hey, folks, just about 10 minutes away from that closing bell. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Word of a Friday deal in the making. Southwestern Energy and Chesapeake Energy said to be close to a merger that would create a roughly $17 billion company, ranking as one of the largest natural gas producers in the U.S. Sources say a deal could come together as soon as next week, provided those talks do not hit a last-minute snag. Shares of both companies are advancing. Southwestern Energy up now by 7%. Chesapeake up by 2.8%. Constellation Brands higher after earnings. It reported better than beer sales for the fiscal third quarter. Shares of Constellation, that uses the ticker symbol STARS, STZ, up now by 2%. Apple off to its weakest start to a year since 2019. Anurag Rana was a guest on Bloomberg Markets earlier today, and he talked about Apple's business in China.
We have a lot of news that comes out of China in terms of what's happening there with the new Huawei phone doing better than the iPhone, and I think that has been a cloud on this stock since they reported. What's surprising to me is that people are reacting to it now rather than November 2nd when they reported and gave all this information.
And right now, Apple shares are trading lower. We've got Apple stock down now by just about 0.6%. Tesla recalling virtually every car it has ever sold in China due to issues with the driver assistance system Autopilot that increase the risks of crashes. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you're listening and watching Bloomberg Business Week, getting ready to chat about the markets with our TV colleagues in just a moment. But just have a story. Crossing the Bloomberg terminal, firms looking to launch spot Bitcoin ETF funds, clearing a major hurdle this week on the path to gaining a sign-off from the U.S. regulators in coming days.
Yeah, SEC staff told several exchanges and issuers seeking to list ETFs that they should submit a final version of a key document as soon as Friday. This according to 4 people familiar with the matter who asked not to be named because the discussions are private. The staff had no additional feedback on the paperwork for several of the firms after the latest amendments, 2 of the people said.
Got to say, when we talked with Kathy Wood at the end of the year, who she too has a filing for a spot Bitcoin ETF, and what's interesting is, said that in terms of the conversations that were going back and forth between regulators and her firm, and I guess I'm assuming others, that it was getting more about kind of the last minute details in terms of the actual filings, and rather than some of the meatier topics. So I'm not surprised.
So it is this major hurdle has been cleared, and it's sort of the details are being hashed out, is what you're saying.
That's what it sounds like. It's the documents are these 19B4 filings. They're proposals for rule changes on stock exchange that will allow the ETFs to be traded. So in other words, it sounds like the major things have been worked out, which is what Kathy kind of alluded to, and that they were getting down to those final details, almost like the crossing of the T's and the dotting of the I's, if you will.
We saw a little bit of a spike when this news came across moments ago with the price of Bitcoin, but it's back down again, about $500 lower. Lost about 1% today, Carol, trading at just under $44,000 per Bitcoin.
Yeah, it says the issuers need the SEC. What?
Sorry, just because this is widely expected to happen.
Yes,
so
yes.
That's why a lot of people would argue that this is priced into the price of Bitcoin.
Issuers need the SEC to sign off on their final versions of their S1 filings. They are the prospectus documents for the ETFs. SEC approval of the 19B4 and S1 forms may or may not happen concurrently, though typically the S1s are approved after the 19B4Ss. I'm sounding like a nerd, but whatever. Or I'm just I'm sounding like I'm very in the weeds. Okay, thank you very much. But
we're all nerds here.
It does sound like it's getting down to the wire in terms of those final details to make it all happen.
Okay, BlackRock, Fidelity last week submitted S1 filings to name their authorized participants. TEP is typically taken for ETF creations.
Yeah, I mean, if the approvals are obtained, the ETFs could start trading as soon as the next business day. So it could happen. What is happening right now is the close of trade. Getting over to our TV side, Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are about 2 minutes away from the end of the trading day, end of the trading week.
Romaine Bostic is not here today. Scarlett Fu here with you, along with Shonali Bostic. We're counting you down to the closing bell, and here to help us take you beyond
He's here in spirit, I'm sure.
Simulcast.
He's here in spirit, or
He's
watching.
always here in spirit. That's a good point. Carol Massar and Tim Stanovic here with us, of course, and welcome to our Bloomberg Television, Bloomberg Radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. Some crucial moments at 8:30 a.m. and then at 10 a.m. And of course, just now, Carol, with the news that the Bitcoin ETF issuers have cleared a major hurdle en route to their SEC approval.
I feel like no surprise when we had Kathy Wood on of ARK Invest. Of course, she is certainly got a filing out there too for a spot Bitcoin ETF and has been, someone we've talked to a lot over the last year or so about this. But what's interesting is she said to us on air that in terms of the conversations that were going back between her firm and the regulators, like things were getting down to kind of just the nitty-gritty details of, like, as I just said to Tim on air, kind of the crossing of the T's and the dotting of the I's. So it does look like the serious issues have been in a large way worked out, and now it was just getting down to the nitty-gritty, if you will.
The technicals, right?
Yeah,
the technicals.
All right, so when we look at what's happening in this market today, it felt like we were going to manage to close up, and right now it might actually happen. The first gain of the new year, 2024, after a pretty dismal start, in which we weren't really sure, Carol and Tim, whether it was, just sell the winners from last year and buy the losers, or whether there's something more fundamental taking place.
That's the question that I have. I mean, we just spoke to Tony Roth over at Wilmington Trust. He said it feels a lot like late October right now. So he would encourage people, if they continue to see a drawdown, potentially 5 to 7%, to jump in. He doesn't think we're going to see another year like we saw last year, but he still thinks it's going to be a positive year for the S&P.
All right, and there you have the closing bells. Look at that. The Dow, S&P, and NASDAQ did close higher, marginally higher. Yeah, the S&P 500 adding 8.5 points to 4697. The NASDAQ gaining 0.1%, and the Dow trailing behind, gaining about 25 points, or almost 0.1% to 37,466. And the Russell 2000, we should mention, a laggard today, did not get that last lift in the final 2 or 3 minutes of trade, and is closing down 1/3%.
All right. Having said that, just taking a look at what's going on in terms of the S&P, a little bit bit of a deeper dive, excuse me, but kind of an even split today. 282 names to the upside, guys. 217 to the downside, 4 unchanged.
All right. Taking a quick look at the industry groups, you have telecom stocks in the lead, up by 1 2/3%. Banks will be reporting earnings next week, starting with, of course, J.P. Morgan, Wells Fargo, Citi on Friday, up by 1.2%, and chip makers mounting a bit of a comeback after yesterday's declines, gaining more than 1%. On the downside, household and personal products, food, beverage, and tobacco, some of your consumer staples, and tech hardware still on the down note. That, I believe, is Apple, off by 1/3%.
All right, really interesting. All right, so that's your look at the big broad groups in the trade today. Taking a look at some of the individual gainers, if I may. Moderna on that list. I was going to actually ask you guys a question. Do you want to know what is the #1 gainer in the S&P 500 so far this year? Sorry.
Is it Moderna?
Did you give us a hint already, Carol?
You know what was happening? I knew it before earlier, but I was double checking to make sure nothing had changed. So I'm like, come on, bring it up. Anyway, okay, it is Moderna. It's up about 12% for the year, up 2.2% here in the trade on this Friday. What's interesting is, I don't know if you've looked at this chart. It has rallied about 60% since early November, way above its 90-day moving average. It's definitely over bought at this point. But what's interesting is it went through, it's going through some organizational changes. It came out, it's been under a lot of pressure. It had a disappointing forecast early November that took the stock down, but it's really been on a bounce back on expectations of maybe some of the new drugs that might come in its pipeline as it moves away from just being a COVID vaccine. They've been testing and looking, early stage testing, I should say, a vaccine in terms of cancer usage. So anyway, investors have been moving into this name in a big way. And again, top the S&P 500
No,
list
it's
so far.
interesting. Sorry to interrupt you. It's just
please.
interesting that Pfizer has not had that kind of lift, given that it's the other big name in the vaccine space, right?
All has to do with the pipeline, right?
Yeah.
All right, just real quickly, let's talk about NVIDIA. That was your top performing last year in the S&P 500, rallying also today, up another 2.3%. BofA coming out and saying that NVIDIA shares have strong upside potential as the company's position within generated AI supports robust free cash flow generation. They've got a buy rating, a price target of 700, stock closing at 490 and change today. Truist also raising its price target on the stock to 691 from 674, keeping a buy rating as part of a broader research note on semis and AI. And then I got to talk about Peloton rallying again on really heavy volume, more than 9 times its 20-day average. Bring it up for you guys. And we're talking about a more than 9% gain, up 25% in the past 2 days. It's all about that partnership with TikTok, hoping to be a bit of a boost for the company and bringing in some new paying members. ISI Evercore views the partnership positively and yet says it's too early to expect any meaningful top-line contribution from the partnership in the near to midterm. But nonetheless, investors are pretty optimistic there.
Yeah, interesting seeing it happen for 2 days in a row.
Yeah.
This news came out yesterday. Hey, let's talk decliners real quick. My question is, how many days in a row am I going to talk about Apple as the #1 decliner?
As long as it keeps
on my
falling.
list? That is the right answer.
Nice.
So 5 days in a row lower, 4 days, all 4 trading days this year, down another 0.4% today. Lost about $190 billion in market cap over the last 5 days. Apple stock was bouncing around today. That did end up moving lower after the New York Times came out with a report that said the Justice Department is closer to filing an antitrust case against the company. Also want to talk about Synopsys. The company shot higher today after a report that it was in talks to acquire the advanced engineering software provider Ansys for about $35 billion. Shot lower, I should say, excuse me, finishing the day down by 1.1%. Synopsys is discussing paying about $400 a share for Ansys in a deal that could be announced as soon as next week. A final agreement has not been reached and talks could still fall through. This according to the people quoted in our Bloomberg story. And then this is a really interesting story. Remy Contro, ADRs, U.S. ADRs of Remy Contro falling, look at this, close to 12% today. This after China launched an anti-dumping investigation into liquor products from the European Union, adding pressure to a part of the business that has really been affected by slowing growth. This investigation is going to focus on brandy products that come in smaller than 200-liter containers from the EU. It's kind of a niche market.
I love this story.
But it's a really interesting story because we also saw a couple other liqueur brands move lower on the day.
You need some Remy Contro to
Liqueur versus
drink if
liquor.
you're an investor, like after
I don't
seeing
know.
that drop.
I don't know which one is which, to be honest.
You guys are interested in equity markets. I am still looking at yields because I want to talk about the move we saw this week. We have seen them drift higher all week long. And even though you see on the day the 2-year yield relatively flat, you still see it ending at 4.38. And the 10-year yield did drift higher another 4 basis points. That bid getting out of the bond market, a little bit of selling there. That 404 level that we're seeing on that 10-year yield, it jumped as high as 409 earlier on the day. On both of those durations, if you will, you have seen a more than 20 basis point move from peak to trough intraday throughout the course of the week. So you still have a decent amount of bond volatility here. You also saw the 20 and 30-year durations here move 4 basis points higher. So that drift is real, even if you have investors recalibrating what they're thinking in terms of rate cuts this year. That economic data, guys, this week has been quite messy.
Yeah, it's been totally messy, and this really doesn't show the extent of the movement that we had between 8:30 a.m. and about 10:40 a.m., the gyrations and yields, and the constant recalibration of what the Fed does next, whether it was from the NFP numbers versus the ISM services employment numbers.
Yeah, our Michael McKenzie, who keeps a watch on the rates market, was just in with Tim and myself, and he said, you know, basically when you see those rates on that 10-year and really kind of all along the curve bump up, especially above that 4% mark, you're bringing investors back into the market, right? Because this is an opportunity for them, especially since the market overall, traders are still expecting a Fed that's going to be pretty aggressive in terms of rate cuts. So there's a little bit of a range, but when you go above 4%, you bring some of the investors back in.
But how aggressive in terms of rate cuts? 6 times this year? Aggressive, or 3 times this year, as Fed members sort of indicated in the most recent summary of economic projections. I think we got data kind of on both sides of this argument today that was, okay, well, you know, in terms of services data that we got, ready to be more bullish on those rate cuts. But in the hotter than expected employment report, some people were less bullish as a result.
We have more data coming up next week. We have remember the inflation print that we have to look out for, PPI as well. And so we're not out of the woods. And you have to wonder also, what is the year going to end at? At the end of the day, I don't know if I care how many cuts there are. I just want to know where we end the year in terms of absolute levels of interest rates and how the market begins to trade it. Remember, people have lost a lot of money in bond markets over the last 2 years. Is this the year of the bond?
Yeah, I don't know. It's a good question. Having said that, I just want to mention that Richmond Fed President Thomas Barkin, we had a story out just a little while ago, right? He's basically saying no objection to cutting rates if confident of the inflation path, which is why that CPI number next week is a really important one. They are still very, very vigilant when it comes to what's going on in inflation. He's a voting member of the Fed. So I think bottom line, we're going to move from data point to data point. You're right, as investors try to make sense of it and hopefully make some money in this market.
Well, that's a macro perspective. And now a micro perspective, plenty of data points to deal with as earnings season gets started next week, first with the big banks, and then it really gets going.
Yeah, exactly right. Next Friday, we'll be talking all about the bank earnings. All right, guys, that's a wrap for the first trading week of 2024. Our cross-platform coverage, radio, TV, YouTube, and of course, Bloomberg Originals. We will see you all on Monday. Simone Foxman and Laura Namias. It incorporates one of the biggest investment in stock stories, if you will, of 2023, the ramp up in the use of the new GLP-1 weight loss drugs. It's definitely been a boon for some drug companies. Everybody's in the pharma space seems to be searching for their own. And it seems it's also been great for many individuals tackling with obesity, diabetes, and potentially, Tim, we've talked about that this may help in many, many serious health conditions to help to prevent them.
So what's not to love, right? Everything's fine. All good.
Yeah, all is awesome.
Not so fast. One side effect, we could say, state and local government across the U.S. are grappling with a growing problem. These drugs are expensive, and they're threatening to drain their healthcare budgets.
All right, so let's get to it. Bloomberg News reporter Simone Foxman, this is her story here in our Bloomberg Interactive Broker studio, along with North Carolina gubernatorial candidate and also North Carolina State Treasurer Dale Folwell, who oversees his state workers' health insurance. He is on Zoom from Raleigh, North Carolina. Simone, first of all, great story, so relevant. Treasurer Folwell, thank you so much for being here. You have proposed that health plans stop covering the drugs for weight loss. Talk to us about your thinking and the cost it has been to your state specifically.
I'd be glad to do that. Thank you for having me. And thanks, Simone, because what we need in this environment is more sunshine on topics like this. We are not questioning whether these drugs work. What we're questioning at the state health plan, which is the largest purchaser of health care and pharmaceutical benefits in North Carolina, is the cost of it. I'm holding 2 vials of the weight loss drug that Novo Nordisk distributes. In their home country of Denmark, this costs about $258. Pre-rebate, it could cost as much as $1,500 in North Carolina. We're not questioning whether it works or how it works. What we're questioning is what we're having to pay for it. If Novo Nordisk, which is a great corporate employer and taxpayer in North Carolina, if they will sell this drug to us on behalf of those that teach, protect, otherwise serve, and taxpayers like them, we could budget that. But we can't budget a cost that's 6 or 7 times higher than what they pay in their home country.
What about when it comes to Eli Lilly, which also makes these drugs? Why are you calling out Novo Nordisk here when you could also use drugs from Eli Lilly?
You're exactly right. When our state health plan, when we realized mathematically that we were about to be under siege, the Eli Lilly product was not approved. So that's the direct answer to your question. Secondly, we have to watch the pennies and the paper clips, no matter if it's Eli Lilly or Novo Nordisk. And Simone's a better one to answer this than I am, but since I work at the state level, not the federal level, I'm not sure that Medicare or Medicaid even cover the cost of this drug. And it's amazing when you look at the number of prescriptions that are coming out of just the state health plan and put it in context of what $170 million worth of pharmaceuticals for about 23,000 people is going to cost the state health plan this year.
Yeah, to be clear here, what Treasurer Folwell is talking about is Zepbound, Eli Lilly's weight loss specific version of Mounjaro, which is the diabetes drug. Now, diabetes drugs, these GLP-1s are broadly approved for diabetes type 2 across various Medicaid programs, as well as Medicare. The question mark becomes when you see them for weight loss. Some states, for their state health plans, for their Medicaid, say, yes, this is covered, as North Carolina's had done, and some states say we just can't, we won't cover them. In part, one of the reasons is the cost. Now, Treasurer Falwell, I spoke to a lot of doctors for this story, and they were very worried about the possibility that not seeing these things covered under certain state health plans, under certain insurers, and especially under Medicaid, would create essentially a two-tier system where some people, rich people, are able to access these drugs, people with the best doctors, and others are not. What do you say to that?
Well, Simone, a great question and a great concern. At the state treasurer's office, we manage $240 billion. That's 8 times the size of the state budget. But we do not run the Medicaid program. So I can't opine about what happens because that is under the authority of the governor of North Carolina through DHHS. What I can tell you is that our responsibility at the state health plan, since we have one of the largest unfunded liabilities in the United States, $29 billion, as well as everything else is going in North Carolina. What I can tell you is that we have to do the most good for the most number of people. We have to watch the pennies and the paper clips. We have to think inside the box, outside the box. And when it comes time for the board of trustees to act, they have to figure out how to use both sides of the box. We're interested in partnering with Lilly or Novo Nordisk or anybody else in terms of trying to get the cost of this drug down. But we will not be bullied with rebates and other kinds of things that will ultimately be to the detriment of those that teach, protect, and otherwise serve, that we have a loyalty and duty of care to.
Now, some people say, some state officials, the companies themselves say that this is ultimately going to save people money over the long term. This is going to reduce medical costs. You and your consultant don't necessarily agree with that, the consultant for the plan. Why?
Well, if they would like to factor those savings at 5 basis points so that we can actually, you can't manage what you can't measure. The fact is that the cost benefit of these drugs right now is completely undeterminable. And at the end of the day, as I said earlier, we are not questioning whether they work. We're simply questioning what we're being charged for them.
It's interesting because the issue of drug costs has been around for years, right? And I feel like that is something that lawmakers, we need to figure it out, right? State of Florida is already, I think, importing drugs from Canada because to access cheaper drugs. Having said that, I want to push a little bit on this idea. I get it in terms of why isn't it cheaper, but this idea that obesity causes so many weight problems for individuals that creates excessive costs within and pressure and stress on our healthcare system. So does it not at this point make some sense in the long run?
Well, there may come a time when that occurs, but that cost benefit analysis is not occurring right now. If we continue on the path that we're on, and Simone, as you know, this is even before this becomes an oral, instead of an injection, being able to consume it orally. And what that could do to the explosiveness of the cost of this. I mean, we have a responsibility to pay the bills that are presented to us now.
Right.
And if this trend continues to go, we could have to double the individual premium on those that teach, protect, and otherwise serve based on the cost of this one drug.
Yeah, quickly, Treasurer, I want to mention, I know you're in the governor's race. You are trailing the lieutenant governor for the Republican nomination. He's been very supportive of of Trump. Are you quite as supportive, and do you think that will make you better with voters? Just quickly, we only have about 30 seconds here.
Well, Donald Trump doesn't know me or my work. He is not I'm not the Trump endorsed candidate, but I will tell you that at the end of the day, my allegiance is to the people of North Carolina to explain conservatism in a way that doesn't offend and to lower hate and to raise hope. And that's what I'm doing as a candidate for governor.
Well, we so appreciate your time, and hopefully we can continue this conversation in the future. Dale Falwell, he oversees his state workers' health insurance. He's the North Carolina State Treasurer, and as we mentioned, also a gubernatorial candidate in that state. And Simone Foxman, you rock. Great story. It's among our most read on the Bloomberg. This is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be a losing week. After 9 winning weeks on the week, the S&P was down 1.5%. Equities had a dour start to the new trading year as traders cling to bets that a March rate cut is still on the table after a slew of mixed jobs data and U.S. service sector numbers. Today, the S&P, though, had an 8-point gain, up by almost 0.2%. The Dow was up 25 points, up by 0.1%. NASDAQ today higher by 13 points, up 0.1%. Key takeaway, though, on the week, The S&P 500 index, the holiday shortened week, by the way, was down 1.5%. 10-year yield now at 4.04% with a 2-year that's at 4.39%. Spot gold up $1 the ounce to $20.44, a gain there of just about 0.1%. West Texas Intermediate crude up 2.4%, $73.91 a barrel. Jobs certainly very much in focus today, but 1 week from today, it'll be all about the banks. Bank earnings begin fast and furious next Friday when we hear from J.P. Morgan Chase, Citigroup, Wells Fargo, and Bank of America. Today, we did see a lot of the bank stocks move higher. Case in point, Citigroup today up by 1%, J.P. Morgan Chase up by 0.5%, Wells Fargo up 1.3%, Bank of America up by just about 1.9%. Again, recapping, stocks higher, losing week for the S&P. Today, however, up 8 points, up by 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Master along with Tim Stanovic. So we just talked about one of the most read stories on the Bloomberg with our Simone Foxman. Well, another one is about well-known hedge fund investor David Tepper, who went all in on 2 trades last year. One quietly helped him make about $2 billion.
Thanks, tech stocks.
Well done. Well done. The other has gone south in a very public way. Yeah, you probably have all seen the videos that have gone viral. Even sophisticated investors apparently can have a tough time. With more, and back with us is Bloomberg News editor Tom Maloney here in our Bloomberg Interactive Brokers studio. David Tepper, good year, bad year. Tell us about these 2 trades.
Yeah, so we started looking at this last year because we knew he had gone big into tech investments around the middle of the year at his hedge fund Appaloosa. And we calculated that those investments had made him more than $1 billion. And so we did a bit more digging around, and it turns out that Appaloosa had around a 20% return, and that was good for about a $2 billion payday for David Tepper personally. So he had a very good year at the hedge fund.
What do you do? Go home and honey, go buy an island? Sorry. Anyway, continue.
Well, there's lots of ways to spend that money.
Maybe buy a quarterback.
Exactly. Well
exactly.
said.
So the other big bet he made last year was on his quarterback at the Carolina Panthers, Bryce Young. They traded away their top draft pick and a few other lower down draft picks to get him, and he has not had a good year at the Panthers. The Panthers overall have had a terrible season. Won only 2 games. They've got their last game coming up now.
6th straight losing season.
Yep, 6th straight losing season for David Tepper, and his worst season by far as owner. So it's been, publicly for him, I think that's what he's best known for these days, is as their owner, and it's been, a very publicly bad season for him.
Well, I think publicly bad in the sense that a lot of people who might not even have been watching the game saw this video of him throwing a drink into the stands in Jacksonville. Let me get this straight. You started writing this story last year, and then on Sunday, this viral moment happens that he's fined $300,000 for.
For those who are watching on YouTube and Bloomberg Originals, you can see this video. It's up there.
So then this happens, and that's kind of like the perfect sort of anecdote for your story.
Yeah, it was very good timing. $300,000 really sounds like a lot. To put that in context, for somebody who's worth $500,000, that's less than $10 equivalent.
Wait.
Based on the percentage of David Tepper's net worth.
So it would be like if we did it and we got, right?
If you got it.
Did you say $10?
And it's like $8.56 is what I calculated. Yeah.
Okay. Can't even buy a hot dog, right? Like I don't know for that much.
Okay, fair point.
But
it was a very public humiliation. Well, very public kind of. He was definitely in the public eye because of throwing that drink on some opposing fans last Sunday in a moment of frustration. The Panthers were getting shut out. They lost 26-0, I think, to the Jacksonville Jaguars. So, it's been a tough year on the field for them, for sure.
What's interesting is, Tim and I talk about this a lot. Like every time there's a story or another billionaire, buying up a sports team. Like it has become, Steve Cohen and the Mets. Like there's just a lot of them. The Waltons. Like this has become kind of just the way it is, in terms of the amount of money that some of these professional teams can be worth, and billionaires have the deep pockets to do it. What is it though? What's kind of interesting is, does it speak to, all right, investing is one thing, owning a professional sports team is another one. Just because you're a good investor doesn't mean you're going to automatically be a really smart owner.
That's right. I mean, and look, to be fair to Tepper, there's obviously still time to turn things around. He wasn't,
So it was
you
his
know, I think a
seventh
lot of
season.
people thought Bryce Young was going to work out really differently than the way he has in his first season. But Appaloosa is not a big organization. You know, there's like 23 employees according to their filing. So it's a pretty small fund. It's mostly managing his own money at this point. Whereas running a football team, that's a big organization. You know, there's hundreds of people there and it's a complicated business.
Well, and somebody who's, you know, who runs a smaller firm and is used to calling the shots, you can't necessarily do that with a professional sports team. You've got to have different layers, right? And coaches and you know, people who are overseeing different parts of that organization.
And you've got to have patience as well. And one thing that he's attracted a lot of criticism for is, you know, he's on his sixth head coach and in 6 years. That's including interim coaches. But there's been 3 coaches fired mid-season, and it's not a good look.
That's also expensive because you end up having to pay out certain contracts if they're fired early on.
Yeah,
in their
absolutely.
deals, as you point out in the piece. The other part of this is, you know, when you're a hedge fund manager, you're used to, and you point this out in the piece, Tom, you're used to making quick decisions and quick, big bets, risky stuff. You can't necessarily do that when you run a sports team, as Carol mentioned. Talk about the stadium, for example, and what happened with the plans for a new stadium.
Yeah, so they got some tax breaks from the South Carolina state legislature to build this new training facility and headquarters for the Panthers about 30 minutes away in Rock Hill. They started building that a few years ago. It was an $800 million facility. There was a whole lot of federal money going into it as well to build a new highway exchange. And then a couple of years into the project, some bonds that they were expecting Rock Hill to issue never came about. They pulled the plug on the whole thing. And if you look at the pictures, this was a half-built facility. I mean, it was
crazy.
huge. There was, you know, he spent close to $200 million, and then there was, I think, another $100 million in bankruptcy. So it was a real kind of fiasco. Another very public issue in his ownership. So, and that just makes it harder for him as an owner going forward.
What does he say? I mean, what does he say about all of this? I mean, he's obviously getting a lot of attention and probably negative attention because of the performance and because of some of his behavior in terms of how he responds. Because critics can, you know, and fans, I should say, can be pretty rough.
They definitely can. And I think it's fair to say that, especially this year, that the relationship with at least the local sports media in Carolina is getting rougher.
Yeah.
He's getting a lot of criticism, and he doesn't always take that well. And obviously the fans are getting frustrated as well because 6 losing seasons in a row, that's tough.
All that said, it's been a pretty good few years to own a sports franchise. Another point that you make in the piece. We've just seen values of this stuff skyrocket, even if they've had 6 losing seasons in a row.
Yeah, well, I mean, when Tepper bought the team, he was the richest owner at the time, but subsequently we've seen, you know, the Waltons come in and pay a record amount. Josh Harris come in by the Commanders for another record amount after that, to the Broncos and the Commanders. So he's certainly made money on the investment, and it's just one of these luxury assets that there's only a limited number of, and people are paying more and more money for them every year. So I don't think, financially, I don't think it's been a bad investment for him.
I wonder what's next. Like, I wonder, does he call up, you know, Stevie Cohen and say, hey, like, how are you doing? How are you dealing? But I do wonder what's next. I mean, is there any talk or conversations? I mean, these guys like to own these teams. It's a lot of fun on some level, right? And to have it despite the losses, despite the fan pressure. But is there any talk of him unloading the team? He's made some money, right?
I think there's been some just suggestions of stake sales because valuations are so high. But I also think he's an extremely competitive guy, and it would surprise me if he was to sell a team at this point. I feel like he's probably got something to prove now and is going to want to stick with it.
Which kind of definitely lines up with, there's an aspect of the story, we were talking about it before we got on air, about something he used to keep on his desk in New Jersey. I guess, was this when he first set up Appaloosa?
What was it?
I'm not going to say it.
Oh.
I don't think any of us have to say it. We call this a deep tease or a tease, but it speaks to his approach on things, right?
We can say it's
It's made of brass.
And it's anatomy, male anatomy.
Yeah, it's very masculine.
Masculine anatomy.
Which makes us think he's going to kind of ride it out and see if he can right the ship. It's a great read. As we said, it's among the most read, and it's really just kind of fascinating to watch. Some of these guys who are titans of finance, right? You can figure out so much and do really well, but then when it comes to a sports team, it's a little different.
The first thing I care about is winning, he told reporters. The second thing I care about is winning.
Yeah.
Yeah, Tom, you described him as a competitive guy. I think that's
that sums it up.
Yeah.
A great read as we get ready for the weekend. Tom Maloney, thank you so much. Happy New Year. Bloomberg News editor Tom Maloney here in our Bloomberg Interactive Broker Story. As we said, if you want to know exactly what we're talking about, just head to Bloomberg.com or check it out on the terminal. You'll find out all the details.
Again, a big thank you to Tom Maloney for that story. Hey, let's go to Washington, D.C. now for a check of the latest world and national news. We got Nancy Lyons in the D.C. newsroom. Hey, Nancy.
Thanks, Tim. President Biden is casting the 2024 election as one in which American democracy is at stake, using his first campaign event of the year to warn voters against returning his predecessor, Donald Trump, to the White House.
Whether democracy is still America's sacred cause is the most urgent question of our time. And it's what the 2024 election is all about.
Biden chose Valley Forge, Pennsylvania to give his speech today, where General George Washington assembled his troops during the Revolutionary War. Biden had hoped to give his address tomorrow on the third anniversary of the attack on the U.S. Capitol by Trump supporters. Well, President Biden's top budget official says she's concerned the U.S. government will partially shut down this month, with Congress and the White House deadlocked over border security and spending levels. She's expressing concerns after hearing House Republicans say they will shut down the government since they control the money.
I've been taught to believe what people tell you and what they show you, and there are a growing number of House Republicans with this mindset. So I wouldn't say pessimistic, but I'm not optimistic.
Shalonda Young spoke with reporters this morning. Treasury Secretary Janet Yellen is sounding optimistic about today's jobs report that shows another month of job gains and wage increases.
What we're seeing now, I think we can describe as a soft landing, and my hope is that it will continue.
Yellen made those comments on CNN. She also says she's especially encouraged to see that average hourly earnings for the year were up 4.1%, outpacing inflation. Southern California was hit by a magnitude 4.1 earthquake this afternoon, centered just east of Los Angeles. No reports of damage or injuries. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. The first trading week of the brand new year is behind us. Turned out to be a losing week for the S&P 500 index, down 1.5% this week, snapping a 9-week winning streak. S&P today, however, eked out a gain of 8 points, finishing the week heading into the weekend at 46.97, an advance today of about 0.2%. Dow Industrial is up 25, higher by 0.1%. NASDAQ up 13, a gain there of 0.1%. 10-year yield 4.04% with a 2-year that's yielding 4.39%. So on down weeks, should investors be buying? That question today for Tony Roth, Chief Investment Officer at Wilmington Trust, who is a guest right here on Bloomberg Business Week.
If we get something more than 5 or 7%, jump in with both feet, because I think that's really the story here, is that we're going to have a positive year on equities. It may not be like last year, but it'll be a positive year.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Sources tell Bloomberg Synopsys is in advanced talks to acquire engineering software provider Ansys for about $35 billion. Synopsys shares down 1.2%. Shares of Ansys lower now by just about 0.1%. 10-year yield, 4.04%. We've got the 2-year, 4.39%. Spot gold, $2,044 the ounce. And West Texas Intermediate crude up 2.3%, $73.88 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week. Carol Massar along with Tim Stenovic. Well, a Bloomberg exclusive that this week is all about how TikTok wants to expand beyond its core revenue model, which has been advertising,
right?
Yeah,
of course, it's advertising. The company, our Bloomberg News team writes, aims to grow the size of its U.S. e-commerce business tenfold to as much as $17.5 billion this year. This is according to people familiar with the matter, and this would pose a bigger threat, of course, to none other than Amazon.
You know, the place where we all shop. Well, Alex Burinka is part of the team that broke the story. She's technology reporter at Bloomberg News. She joins us on Zoom from Los Angeles. A lot to get to. Let's talk about TikTok and its ambitions. Give us a little bit more color on it and how it's going to get there.
Yeah, so this will be the first full calendar year for TikTok having shop fully open in the U.S. Just before the holidays, TikTok, which folks know as a social media app and entertainment app, as you said, that mostly derives its revenue from advertising, decided, hey, let's launch a shop functionality. So now people who post videos on the app can also tag things. Brands can upload their merchandise, and you can kind of scroll through on a separate tab that looks like Amazon. They came out with this just before the holidays, and this goal for next year kind of builds off that momentum in a really big way. We've seen a lot of big tech companies in the past, think of Meta's Facebook and Instagram, YouTube Shopping, who have kind of rolled out the ability to shop. Meta's scaled those things back. So you've seen big tech kind of get involved in this space, but this to me looks like the first real competitor from somebody who comes from a social media background, who seems to be getting like real true momentum, convincing people to shop in frankly a different way than say Amazon or Temu or Shein, and shop on their social media platform.
Does it seem like it's working for YouTube? It's working for Instagram? The social, like combining the social elements with commerce? How's it working out for them?
We don't hear about it a lot, and I think that that's a pretty good indicator. We've seen Meta. Meta's a good example with Instagram. People do buy things off of social media, but most of those things are coming from ads, or those purchases are happening off the platform. What TikTok has done is basically like created this walled garden on the app, where not only are you kind of seeing people talk about things, they're not linking out to other platforms, you're actually doing the whole purchase right there on TikTok. So that is a very distinct difference. There are some ads, there are just regular posts. There are influencers who get paid if people buy from their posts. But I think the real big distinction here is they are managing all of the inventory. They're matching influencers with these brands.
Okay.
They're helping the brands actually sell stuff. And that actual checkout happens right within TikTok. So, is this more, it's definitely more than what the competitors are doing. And it looks a lot more like a proper e-commerce functionality than perhaps, an ad where you click and you're directed to another website and you have to figure out how to check out over there.
You know what's interesting about this is I was talking to Carol about this a little earlier as we were prepping for this segment, and she said something like, so it's like a social version of what Amazon is doing, and I was like, Amazon has this new social tab that showed up in my Amazon app that I clicked, and it's like basically a weird TikTok impersonation.
Yeah.
It's like, I don't want to call it a TikTok-like because it's vertical video. You scroll through it, you flick it, the video up. It's really weird. I don't know, Alex. What do you make of it?
It's different.
It's different.
I believe it's called the Inspire tab, and we actually broke some news earlier last year that Amazon was trying to pay influencers $25 a video to post there, which in the influencer space, that's tiny amounts. So Amazon seems to be mostly paying folks for those videos. As you say, the experience is just not the same. TikTok's, it's a little bit copying some of what TikTok DNA is, but what they really have is kind of the magic that made them really sticky and popular on the social media side. They have this algorithm that if you're interested, Tim, in dogs and cooking content, but Carol's like me and she loves watching F1 race cars and also might have a puppy at home, our feeds will look really different. We both might see dog stuff, but we'll see things that are really catered to us. What Shop is doing is layering on to that, saying, hey, dog walking creator, here's a leash that you can tag in your post and check out right on the app. They're trying to really seamlessly integrate that discovery process of finding new things into a really entertaining format versus Amazon. If you're on the Inspire tab, I would love to hear from you. I don't hear from a lot of people who are looking there, but most of the time when you go to Amazon, you're hitting that search bar, you're typing in tube socks, and you're checking out for that one item.
The only time I go to the Inspire tab is when I accidentally click it.
He's like, whoops. I mean, should Amazon be worried?
I think that this is the first kind of social media company that should actually have them worried. TikTok and its parent company ByteDance and its sister app Douyin in China have really figured out social commerce in Southeast Asia. Now, it's a little bit different over there. It's mostly focused on live shopping. According to my sources, the companies have discovered in the UK and the US, people shop here differently, mostly in your feed versus live shopping. And they're figuring that out and they're being agile. Instead of just running into kind of a roadblock saying, hey, our strategy over in Southeast Asia can't just be a copy paste here in the US. They're making big changes and hiring people with retail backgrounds. So amongst all of the efforts that we've seen out of big tech companies, this is perhaps the first one that should pose a bit of a concern. We'll see after this holiday season, what kind of brands are piling into TikTok and Shop. But certainly this would be the one that I think would raise some eyebrows up there in Amazon.
I got to say, Alex, it feels like TikTok's like out there in 2024 already. While we have you here, TikTok and Peloton, what are you hearing as you report on your beat about this partnership? Because Peloton investors are pretty excited.
It's fascinating. They are. Peloton said that they're bringing live fitness classes and other content to TikTok. And Peloton investors have driven that stock up, 14%, 15% over the last 2 days. It is part of this kind of broader strategy I talked about with TikTok. So TikTok said live stream shopping might not work here. So they split that strategy up and they said, hey, let's focus on shopping the way US users want to shop, but also let's also work on live and just getting people to tune in to live content. This seems like an early example of one of these content deals that we might see from them that, it's not just an influencer, but this is a kind of verified brand that people know and have heard from just to get users here used to and excited about tuning into the same thing at the same time, which is not really a user behavior that Americans like to do. So it's fascinating. Peloton obviously probably loves the young user base on TikTok. Investors are probably looking at that and excitedly rubbing their hands together. But for TikTok too, there's definitely a reason here to get people used to tuning in at a specific time and getting folks watching.
Do you use TikTok a lot? Just quickly, 5 seconds.
She has to for work.
I am. I do for work. I'm on there as well. I am also on Peloton, so I'll try it out for you guys and let you know how it goes.
Hey, it sounds good.
Are you on TikTok?
Not on purpose. Like people send me TikToks and I look at them.
Alex Barinka, have a great weekend. She is Bloomberg technology reporter joining us here.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Friday energy deal underway, possibly. Southwestern Energy, Chesapeake Energy, said to be close to a merger that would create a roughly $17 billion company, ranking as one of the largest natural gas producers in the U.S. Now, according to sources, a deal could come together as soon as next week, provided those talks do not hit a last-minute snag. Shares of both companies, though, up today. Southwestern up by 7.3%. Chesapeake up today by 2.99%. Bank earnings begin fast and furious next week when we hear from J.P. Morgan Chase, Citigroup, Wells Fargo, and Bank of America. All of those banks did move higher today. Tesla's recalling virtually every car it ever sold in China because of issues with the driver assistance system, and more from Bloomberg's Tom Busby.
Charlie, word came from the State Administration for Market Regulation. The car maker will deploy an over-the-air software fix to more than 1.6 million vehicles produced between August of 2014 and December 2023, including locally built Model 3s and Model Ys, as well as imported premium models. The regulator says Tesla drivers may misuse autopilot functions, increasing the risk of collisions and posing safety risks. Now, Tesla's automated driving systems have been the subject of growing scrutiny after hundreds of collisions, some of which resulted in fatalities. Charlie?
And that's Tom Busby reporting today. Tesla shares declined by 0.2% on the week. Tesla was down 4.4%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
It's Bloomberg Business Week on this Friday afternoon. Oh, I'm sure. I'm Tim Stenovec. That's Carol Masser. Let's get a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden is on the campaign trail today, speaking in Blue Bell, Pennsylvania, near Valley Forge, just a day before January 6th, which will mark 3 years since the attack on the Capitol. President Biden says Americans need to decide what they stand for.
Today, we're here to answer the most important of questions. Is democracy still America's sacred cause? I mean it.
Biden says Trump's brand of politics and rhetoric are at odds with what he sees as the nation's ideals. The first major winter storm of the season is expected to affect much of the East Coast this weekend, from the mountains of North Carolina to Vermont and New Hampshire. Many areas that will be affected have not seen a significant snowfall in several years. In Boston, Mayor Michelle Wu says city crews are prepared.
Nothing is quite predictable here in New England, but the timing of this, so far, fingers crossed, does mean that it should have less of an impact on the normal rhythms of our weekday commutes and school pickups and drop-offs and all of that.
The Wu says crews will be out all night to keep drivers safe. The longtime leader of the National Rifle Association, Wayne LaPierre, told board members today he is stepping down. His resignation comes on the eve of a corruption trial in Manhattan, in which the New York Attorney General Letitia James was trying to remove him from that job. She's also seeking financial penalties in the case. Paralympic runner Oscar Pistorius is out of prison. He was released on parole today, having served 9 years of a murder sentence for the 2013 killing of his girlfriend, Reva Steenkamp. And he was half of the fighting TV duo Starsky and Hutch. 80-year-old David Soul has died. Soul also had a hit on the music charts with this song.
Don't give up on us, baby.
David Soul's wife says he died surrounded by his family. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Tim and Carol.
All right, Nance, thank you so much. Carol Masser along with Tim Stenovec live here on Bloomberg Business Week. Wrapped up the first trading week of 2024. And in just a moment, we're going to talk with David Weston.
The
Wall
worst
Street
week
yeah.
in 10 weeks.
Yeah,
You know why?
Why?
For the S&P 500.
For the S&P. Well,
because it was in the red
what,
for the first time in 10 weeks.
I mean, this is what happens when you have quite a run. There was, quite a bounce back late last year on expectations, of maybe the Fed is done in terms of its rate hiking cycle. And that's something we've been talking a lot about this week because it does feel like there's a little bit of a reset in terms of valuations and thinking about what the Fed might do. A little bit of a disconnect maybe between the equity and the bond markets on that.
One stock that I've been watching closely this week has been Apple. As you know, it's been my top decliner every day when we talk to our TV team. It had its worst start to the year by one measure as investors react to the mounting pressures on the company. And Carol, in jeopardy is its long-standing status as the world's most valuable stock by market value.
You know who's watching closely? Microsoft, which is in number 2.
Which, by the way, Microsoft did exceed Apple's market cap back in 2021. Don't forget, Apple has only held this perch for about 2 years at this point.
Listen, Microsoft is also riding the AI wave. I mean, they've got a lot of things that seem to be firing on all cylinders. We talked this week, right, about their keyboard adding a new key that is
first time in decades.
Yeah, a big, and certainly related to the artificial intelligence craze, which many Wall Street watchers say this is going to be another momentum driver here in 2024. I thought we had a great conversation with Mark Gurman and Anurag Rana about Apple specifically, and there were some concerns in their voice, although Anurag saying, listen, this is, though, the device that emerging economies and markets, those consumers are going to aspire to. So he seemed, bottom line, positive in the long